Welcome back, everyone. NIO just closed the week at $5.01, up nearly 3% after breaking through resistance near $5. That move followed Thursday's powerful 8% breakout rally, and today's action showed that momentum is building, not fading. Volume was massive, at 130 million shares, which tells us this isn't just retail excitement. It could be institutional buying and short covering too. Market watch. So what's driving this renewed strength? First, deliveries remain solid. In July, NIO delivered 21,017 vehicles, just slightly above last year's total. While that represented a monthly drop of 15.7%, it was enough to highlight ongoing demand, especially during a broader dip in industry volumes. XPeng led the pack with gains, but NIO's ability to hold steady is notable. Investor Place, plus 12. Investors.com, plus 12. MarketWatch, plus 12. Second, the pivot to mass market is continuing to validate. More than 40% of June deliveries came from Onvo and Firefly. With the Onvo L90 now starting deliveries, investor conviction around this strategy is rising. The fact that NIO now has multiple lines targeting both premium and more affordable buyers means it's no longer a niche play, it's scaling up. On the cost side, NIO remains committed to hitting adjusted operating profitability by Q4 2025. Management is targeting SG&A below 10% of revenue and streamlining R&D spend. The financial discipline is real, and it's resonating with longer-term investors who want to see execution, not just vision. Meanwhile, the battery swap network continues to be a differentiator. Roughly 20% of NIO swap stations are already profitable. That unique infrastructure is proving its value not just in service but in potential recurring revenue. It's a moat around convenience and brand loyalty, something few other EV players can touch. On the technical side, Thursday's move snapped a losing streak and cleared near-term resistance around $4.90 to $5. With strong volume and follow-through on Friday, that resistance has turned into support. The chart setup now looks more constructive, and the risk-reward favors continuation rather than a retest of lower levels. And let's not forget the short interest setup. With NIO still carrying around 9 to 10% short interest, a breakout above $5 backed by volume could squeeze weak hands out. That adds asymmetric upside, especially when combined with improving fundamentals. Looking ahead, the next catalysts are clear. July and August delivery totals, particularly from Onvo and Firefly models. Q2 earnings in August, where margins, guidance, and cost discipline will be under scrutiny. News on battery swap profitability, utilization rates, and geographic expansion. Strategic commentary from analysts, upgrades or internal forecasts that shift sentiment upward. In short, today's move isn't just a short-lived pop, it fits perfectly into the broader narrative we've been following: execution, scaling into the mass market, margin improvement, and infrastructure advantages. So whether you're holding or watching, the setup remains compelling. NIO may have paused briefly, but right now it feels like it's just warming up. Thanks for tuning in. If you're enjoying these updates, please like, subscribe, and hit the bell. I'll be back next week with the latest as we follow this story into August.